Hi everybody, this is Lara with your weekly video for US oil for the week ending Friday, 10th of February 2023. I'm recording the video after 5 PM, so I should have final volume data from stock charts, and it shows an upward week with some push from volume, although short term a bit of a decline. The picture just isn't clear, and that's been the case for a while for oil. Of all the markets I analyse, this has been the most choppy, overlapping and really difficult to analyse for a long time now. I still have 2 wave counts, and my main wave count will still expect a third wave down, may have begun. The target remains the same, midterm 46.33. On the way down, a new low now below 70.09 would add final confidence to this wave count. The alternate still will be valid with some adjustment. It still expects it's possible a bounce could continue to end from a zone 105.57 to 116. It has a reduced probability. We'll get to why when I show you that chart. On the weekly chart, oil's major low down here in April 2020 sees the end of a supercycle degree second wave, subdividing as a double zigzag. When 2 ends, 3 begins. Supercycle wave 3 may only subdivide as an impulse. Within an impulse, cycle wave 1 must subdivide as a 5-wave motive structure, and cycle wave 1 does. It's labelled as an impulse. Primary 1, 2, 3, 4, 5. Within primary 5, intermediate 1, 2, 3, 4, 5. Intermediate 4 is more brief and shallow than intermediate 2, and that's because the strength of intermediate 5, the strong upward blow off top, has pulled intermediate 4 up, causing it to be more brief and shallow. That's pretty typical of commodities, although this example is rather extreme, but it is normal to see fourth waves in commodities and cryptocurrencies more brief and shallow than their counterpart second waves. This big channel here, here's the upper edge here, and here's the lower edge here. It's copied over from the monthly chart. Price approached it, found resistance, moved lower, broke through, a bounce, pull back to test support here and here, and again here. I will expect eventually when intermediate 3 comes to end, it may find support at this trend line, and then a big bounce for intermediate 4, and then finally a final test of support to end cycle 2 will probably end at this trend line. Technically, cycle 2 may not move beyond the start of 1 below 10.24. Cycle 2 looks most likely to be subdividing as a single zigzag, A, B, extended C. This labelling may have to change in coming weeks or months. There are still multiple structural possibilities that cycle wave 2 could be, and so we still have to be open-minded and flexible. It's a correction, and with very typically choppy, overlapping movement, so typical of a correction. Within primary wave C, if intermediate 2 continues further, it may not move beyond the start of intermediate 1 above 123.68. Let's take a look at the first or main daily chart. This low here, the end of a leading contracting diagonal for minor 1. This point down here, minor 1, followed by a double zigzag of minor 2, minor 3 underway. The target is for it to reach equality in length with 1 at 46.33. That's the ratio I'm using because intermediate 2 was so relatively shallow. Intermediate 2 a double zigzag. Intermediate 3 may only subdivide as an impulse. Within it, minor 1 may be over here, minor 2 a zigzag over here, labelled minute A, B, C, and minor 3 beginning here, with minute 1 and 2 possibly complete. This wave count, if this is correct, expects a third wave down at 3 degrees, minute, minor and intermediate, to start early next week. This wave count expects a downward breakout from this consolidation that price has been in for over 10 weeks. If minor 2 continues higher, it may not move beyond the start of 1 above 93.75. It's all the same to this point here on the daily and weekly chart, and then after that, which is just off to the left of the chart, we're now considering the possibility that intermediate 2 might not have been over here as a double zigzag. It could still be continuing as an expanded flat. This is still possible with some adjustment and moving the invalidation point here, but now it has a reduced probability, and I'll explain why. If it's an expanded flat, it's labelled A, B, C, and C is incomplete. It may only subdivide as an impulse. 1, 2 could be over here as a double combination. 3, 4, 5 is needed. The problem now is the length or duration of minute wave 2, it will fit beautifully as a double combination, expanded flat for W, X, zigzag for Y. Has a really neat fit. This wave count still has a really neat fit, which is one reason why I still need to keep publishing it. It is still valid. I was probably a little bit too quick to move my invalidation point up and should have left it down here for you. This wave count is still valid, however, the duration of minute wave 2, a low degree correction within minor C, it just doesn't have the right look, this part of the wave count anymore. If minute 2 continues any lower, it may not move beyond the start of 1 below 70.09. Now it is technically possible that minor wave B could be considered moving lower, but you'd have to label it W, X somehow and Y as a double combination, and it just doesn't make any sense. I could force it to fit and meet Elliott wave rules, but it wouldn't meet the spirit of the structures, so I probably don't want to consider that. For the short term, a new low below 70.09 would invalidate this alternate, add quite a lot of confidence to the main wave count, we'd have a downward breakout, and then the main wave count would expect a third wave at 3 fairly sizable degrees, or at least intermediate and minor degrees, sizable degrees, would be in its relatively early stages. So that would be a really bearish movement. However, while we have price above 70.09, this wave count will remain valid. The target zone remains the same, 105.57 to 116. The invalidation point the same. Intermediate 2 may not move beyond the start of 1 above 123.68. On the weekly chart, last week we had a strong downward week and it had a good push from volume. That was really bearish. This week, technically we've got a downward week, but it's a strong green candlestick, mostly upward movement within the week, and it's got further push from volume. So we've switched from looking quite bearish last week to quite bullish this week. Look out for support about 77.5, but more importantly below that about 65, and resistance above about 85. On balance, volume still in a range, no trend, no signal. ADX at the weekly chart level still indicating a downward trend. RSI, money flow and stochastics all neutral, and ATR declining as price moves lower. On the daily chart, there's good support about 73 and pretty strong support about 82. Price has been swinging from resistance to support and back again. And while it does so, stochastics hasn't quite been reaching overbought on each swing, has been reaching just into overbought, just into oversold. Overbought, oversold. Let's expect overall a bit of an upward swing may continue about resistance 82. How price behaves when it gets to resistance is going to start to tell us which of the two wave counts may be most likely. So the main wave count allows for a little bit more upward movement. Let's see how price behaves if it gets up to 82 next week. If it closes above that on an upward session with push from volume, we may have an upward breakout. However, if it turns around and moves lower and closes below support about 73, especially if it has push from volume, we may have a downward breakout. Essentially, we need to see a breakout of this consolidation to have confidence in the direction of the next trend for oil. But probability favours a downward breakout because it is in a larger downward trend. A series of lower lows and lower highs remains intact. Assume the trend remains the same until proven otherwise. That's another reason why the main wave count will be the main wave count this week, and the alternate this week has a reduced probability from what it was at last week.